It's going to be a rough year. I think the early part, certainly the first half of 2023, it's going to be all about a high interest rates environment. The recessions in the US, the recessions in Europe and elsewhere, they're only just getting started. I think we're definitely in six-figure Bitcoin by then. I think DeFi is going to be a big narrative of the next bull market.
So, far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the corrections themselves. A quote by Peter Lynch. If you don't know who Peter Lynch is, he is a legendary mutual fund manager. He was able to produce 29% annual return for over a decade with his fund. So people often go to Peter Lynch to get ideas and quotes and just inspiration from a legendary investor. And I think this is quite fitting for what is happening at the moment. Now, I know I'm probably going to get off on the wrong foot with many people. It's not my intentions whatsoever. The main point I mean here is just major media outlets, not investors, not traders, just media outlets, the big ones in the space. So I'm not having a go at the people themselves, just the ideas. We just need to split that up right now. And I feel like this is a pretty important time to be talking about this, as the markets are basically doing the opposite, the exact opposite to what was being predicted 3 months ago. So like I said, I'm not having a go, and I think this is it. That this is all I'm going to do on this part right now, because I know that does trigger a few people who are very emotionally attached to certain personalities in the space. The other thing I want to put here is being wrong is acceptable. I've been wrong in the past, definitely. I will be wrong again in the future. Maybe I'm wrong about this, we'll see. But staying wrong is totally unacceptable. And I guess it just comes down to how far you're willing to stay with your own views of the market while the market is doing the opposite thing. After all, we're only here to make money from the markets and, of course, learn. That's a big part of why I got into investing when I was 20 is I found it was one of the best ways to learn about myself and improve myself and make money in the process of improving myself. Because if I don't improve, if I don't change and adapt, then I'm going to lose a crap ton of money. And I've lost a lot of money in the past. And this is what keeps me going, is knowing that I'm able to improve myself and I can see the results in my bank accounts, in my trading accounts and all that sort of thing. So since those times, the late December, when people are talking about big recessions coming in 2023, the SP 500 is up 9.6%. So that's from that December period there. The NASDAQ is up 24% from that point. And there was a lot of calls around European recessions and a lot of countries getting into strife over in Europe. The French market, if you follow me on Twitter, is hitting new all-time highs again. They're having lots of problems out in the streets, you can see, with the president trying to increase the retirement age from 62 to 64, and people are getting quite pissed and riots are going on. That's what the French do. They're quite good at it. Their stock market is hitting new all-time highs. Now, I'm not saying that we won't get a collapse eventually, but it doesn't seem like it's going to happen in 2023. Meanwhile, the major media, not investors, not traders, not anything else, they're just media outlets, are talking about recession and the fears. And they're starting to change their wording around this now. So pay really close attention to that. And that's why I've probably titled this video something along the lines of the recession's getting cancelled or things like that. We're going to go down that path in 2023, that the wording will change from people who were calling recessions and deep, dark recessions, deep depressions, anything along that line, collapses, and they'll change their wording throughout the year, and it'll become less and less and less while the market continues to float up. So this is just the French market. The UK market did hit new all-time highs in February. We had the banking collapse, and now is just a fraction of a percent, maybe 1% off the all-time highs. So 1.9% off the all-time high again, and has rebounded pretty drastically there. So UK is obviously a big market in Europe. The German market, the DAX here, it's 3% off a new all-time high. And like I just said, the French market is well into a new all-time high. And this is obviously off the back of their luxury goods brands that they have in their stock market. All that stuff is at all-time highs. And at one point, the owner of those brands, the Louis Vuitton, Hennessy, something or other, the name of that company, was actually worth more than Elon Musk and Tesla himself. So it just goes to show you what's actually going on in the markets, not my opinions. All right, I've got my opinions about media and that sort of stuff, but what's actually going on is things are hitting new all-time highs. Not only is it in Europe, the Aussie market is 3.7% off an all-time high. This was the banking collapse, this little area here. This is my tweet on Twitter as well. And we had that double bottom in June and October of 2022 before we went on a pretty good rally, nearly getting to the all-time high. And it looks like we're on our way to that point now in maybe quarter 2 or quarter 3 of 2023. Nothing like what has been predicted at the end of 2023 when we were basically at, we're at the lows here in October. And then this is when people were really getting fearful about the markets on that higher low. And then we had the next higher low in March. This is what I talk about time and time again. And I guess you could ask the next question is, well, who do we trust? What do we do? I would definitely be doing your own research, not taking the news headlines in as part of a trading plan or investing plan, but just keep an idea or keep a broad of what they are saying, because it's almost always incorrect. And this is how most people lose in the market every single time. We know 90% of people lose in the market. Now, of course, I'm having like a bit of a D&M here with you guys on the channel. It is just crazy to me how often it happens time and time again. And I guess a big reason why I'm bringing this up now is because there is a clear example of it in the markets. I don't want to keep referencing back to that because I'm not having a go at the people. I'm really not making any friends in this game by the looks of it. But it's not about the people themselves. It's just the ideas that are circulating over and over again with massive media outlets across crypto, stock markets, real estate, whatever it may be. And the same thing will happen at the peaks. And during those peaks, maybe in a couple of years' time, a few years' time, I've talked a lot about the peak being around 2025, 2026, maybe it goes a little bit beyond that. It's still early days. We're in 2023, okay? So it's still early days. Maybe we do go up to those levels and it really starts to ramp up at those higher prices, right? And the media is going to be very, very, very bullish. And unfortunately, retail is going to get slaughtered at those tops. So I guess it's a good time. Well, what I see now is a good time to be talking about it before we get to those peaks. And people just dive into property and that sort of stuff before the market then comes back down and destroys their portfolios for a long period of time. It could be 3 years, could be 4 years. Maybe it's not for another 5 to 10 years before the market finds its way back to previous tops. I don't know. I don't know what that's going to look like. I don't know where this top's going to be yet. Let's see how we get out of this particular period right now. But what I do know, guaranteed, is that the media is going to be extremely bullish as we head towards those tops. It's going to be even more bullish. So extreme bullish times 10 when we lead into a lower top, macro speaking here, maybe sometime in late 2026, maybe sometime in 2027. And then as we start to collapse like we did in 2008, that's when the fear and the panic and the pandemonium and everything like that sets in and people get absolutely slaughtered. So I really wanted to just mention that here early on, bit of a D&M, bit different to my, try to put in my dad jokes and my humor, but it's a clear example and let's make use of those clear examples in the market when we get them. Because like Peter says, far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in the correction themselves. So there's a lot of people anticipating a correction here. I'm definitely not anticipating a correction at this point. I'm anticipating a correction later in the market, but I will not be anticipating the correction on every dip that happens as the market goes up. I'm not in that game. I want to wait and see if the market gives me that dip, and you want to see that lower high, something like that. You'll be able to see it and feel it and taste it as that market comes down. So I don't want to anticipate on the way down and keep shorting every time the market goes up. That's just a fool's game, and we'll get absolutely slaughtered if we do that. And as Jack says, being wrong is acceptable, but staying wrong is totally unacceptable. So if we do get trapped in that game of trying to short it on the way up, just get out of it. Get out of it. Being wrong is acceptable. That's okay. But staying wrong is unacceptable. And trying to short the market all the way up, something like what Michael Burry did and is famously known for after that 2008 movie, The Big Short here. He was basically trying to short this entire market all the way up. It doesn't look like much here, but if you zoom in, that's a long way that he was shorting from, somewhere in 2004, 2005. He was only lucky that he was using other people's money. If it was his own money, he'd probably run out of money and get absolutely destroyed, only to see the market then collapse. So take that into account, especially as we potentially, I can always be wrong here, but potentially start to climb out of these tops. So if you haven't liked and subscribed to the channel, as I've pointed out before, I think I stand by all of my work, and I think this is the best value work you're going to get anywhere on the internet, because we bring together real estate, stock markets, cryptocurrencies. Links in the top of the video description. That is for my investor alpha report here. It comes out once every 2 weeks to your inbox, going through all of this stuff. And of course, if you want to get even more detail and learn how to trade and invest in the markets, TIA Premium. Link is down there in the video description as well. Now, we're not finished there, guys. Just needed to drop that in there because there is just a lot going on in the markets, and try and bring a little bit more of a positive humor back to today's video. Well, let's look at the VIX. There's not like a whole lot of humor here, apart from the market breaking down. Not really that humorous, but we're seeing the VIX drop from these highs. And like we've looked at, when it gets to around that 17 reading, you can see the 17 here if I move this out, between 17 and 11, this has usually been a pretty solid sign of bull markets, and just bull markets plodding along. You're going to get peaks out of the 17 level. So if we start to drop in here and move out of it, it's going to happen. That's going to be part of the bull market. But we've really just seen it finally break down of this from this diagonal uptrend there. You can see that we're tracking that all the way down. That's why we were looking at the bear market not being as severe as everyone else was making out that it was going to be that severe. We had that solid low in June, the solid low in October, higher low in December, higher low in March, and we've had the highest weekly close in 33 or 34 bars. I think that might be slightly off, but essentially it's been the highest weekly close in almost 8 months, and we broke above the 50% level and got a close above there. So things are happening at a snail's pace here, which is why the bearish news continues to stick around. That's the only thing that's really that sticky at the moment. We can get it past 4,200. That's going to be looking really, really juicy for these markets as well. Same sort of deal for the NASDAQ. It's just a few percent off the 50% level. So have a look at that at 13,620. So 3.5%. That's that swing top in August. It's coming right back. There's one thing I could point out that I was wrong on. I thought the NASDAQ had a little bit further to drop. But once we saw the S&P go up, then it wasn't likely that the NASDAQ was going to go down further. And then we saw this big break in January, a pull back into March, and now it's pushed higher again. So we've got to get back above 13.6, so to around 13.8 would be lovely. And that's the NASDAQ itself. The VIX is obviously showing signs of bullishness heading into the zone of the bull run territory here. So when it goes in between 11 and 17. Sentiment data. Now, I'm going to go through this in a little more detail in next week's videos, but there's some really interesting stuff here where we've seen the advance of bullish relative trends in Europe when this swings from 100 to 10. So this is the only handful of countries remaining in correction territory. So basically, like I showed you, a lot of these European countries are getting close to all-time highs if they aren't already in all-time highs. This usually lasts for quite some time. When the percentage of European countries in correction territory cycles from 100%, so when they're all in correction, to less than 10% of them are in correction, then the index tends to trend higher across all time frames. In every case, the signal showed a gain at some point in the first 3 months, and drawdowns over the same horizon were benign. So basically 12 months later, after this signals swings from all of the countries in correction to less than 10% in correction, 12 months later, you typically see about an 11.8% return. Positive here, 75%. Average max loss, 2.9%. So it doesn't always work, but the loss is very minimal. And the gain is quite big. Max gain is 13.9% here. So I personally don't like betting against all of these odds when markets are swinging into positive territory. The only thing that's really bearish is news headlines and the market sentiment and people trying to piece all these things together saying you're wrong, it's interest rates, it's cash isn't coming in, liquidity, you name it. There is just something to talk about why everything must be bearish, yet the market, the signals, everything is showing that this year is going to have some pretty positive returns like we've covered many times before. So make sure you have liked and subscribe to the channel. Now, Bitcoin, cryptocurrency, from those particular calls back here around that, just want to mention the date there, 26th of December, 2022, the returns here on Bitcoin around 81%. And some will say, well, it wasn't talking about Bitcoin, only talking about the recession and the economy, and Bitcoin has to succeed because it's not in the banking system and it's an alternative. Nonsense, absolute nonsense. What happens with Bitcoin and cryptocurrencies is it's almost like an indicator, or at times maybe a leading indicator that says risk is coming back into the market. Bitcoin, solid move to the upside. So risk is coming back. People or investors are interested in putting their money at risk again. Bitcoin showed that, 81%. Stock markets are lagging in the US to Bitcoin at this stage, but they're all still going up in unison. Okay, so there's no decoupling. There's none of this BS going on. We're seeing European markets leading the charge at the moment. I think the US is going to come back stronger as well. We'll wait and see. Either way, they are up from their lows in October and December, and of course, March one there as well. And Bitcoin has just put in a highest daily close in 341 days. We're closing in on that 52-week highs here for BTC. The close was $30,493. So just a few months ago, people would not have believed we'd be here. I would not have believed we'd be at $30,000 on BTC. I thought we were going to track around a little bit longer and push higher, but I was definitely in the camp that the November low was most likely going to be the cycle low. And that's how we started to do our counts from that point in the market. We're going to have a pullback at some point, but like we've talked about, looking at around April, May, we'll see what happens, whether we keep going up, where that top is anyone's guess. I'm not trying to play that game. It's just the timing game is my preference here. So maybe we top out and just have a pullback to, these sort of levels here. Let's wait and see. That's too much speculation at this point in time, but there will be some sort of pullback or pause in the prices as well. That's just how the game is. I can't see this being taken out to the 19.5K low, and I can't see these getting taken out either, the 15.5 to whatever that is, 16K low. So I think these are probably safe. Let's wait and see where the top comes in first, and then we can start to measure to the downside as well. Total cryptocurrency market cap has also closed very, very high. If this week closes out above 1.18 trillion, it's going to be one of the highest closes in the last 47 or so weeks, which is pretty decent for the total cryptocurrency market cap. Of course, 50% of that is BTC, and then 20 or 25% is ETH, and then the rest of it are the altcoins. But Michael here, my brother, was, I would say, one of the only people. If you know anyone else, let me know in the comment section down below, because it's always good to follow other people who are in tune with the market and get an idea and make your own perspective, of course. But he posted many, many times on your channel that he believed this was probably going to be the low for the total cryptocurrency market cap. And I've got it labeled here as the final capitulation zone. Basically, only weekly wicks were able to penetrate that low price there at about $760 billion. So amazing call there from Mick. That's not my call. Michael's call got really spot on, very close to the market there. And we've seen a nice move to the upside from that point, breaking resistance here. I'm still looking out for around 1.5 trillion, getting above the 50% level, just to give us some more support in the total cryptocurrency market. Let's wait and see, of course, as with everything. But for now, this is looking relatively healthy. This is probably the low in now. We'll wait and see what happens from that point. Now, I did say at the beginning of the video, there are some people who I follow for news and information, real information, not just headlines and not just repeating the narrative that's out there in the media, because you can go and get that anywhere. You can get it for free. Just open up a news headline or Google. Phil, great guy. You've seen him on my channel before. I might be having another interview with him as well. So make sure you do subscribe and go follow him on Twitter as well. He's not like everyone else on Twitter. You'll get a picture of that very quickly and just posts what he feels like is important at the time, especially around the real estate cycles of the US, of the UK, and Australia. And of course, the other countries all come into that as well. Your Canadas, your Singapores, your New Zealands, developed Europe, that sort of stuff as well. Another recent Twitter account that I followed is Seth Golden. So it's been probably a few months. He's on the bullish side, but he explains it in a lot of detail. You know me, I don't talk about other accounts almost ever, but these are some of the good guys that I have been following, and they hit it from a different angle, so I'm learning at the same time. So if you're interested, go and follow these guys on Twitter, and you start to read about how they interpret markets compared to mainstream media, who are always 2 steps behind that 8 ball. Nothing wrong with the people themselves, okay? Nothing wrong with the people themselves. I would love to have a coffee, a drink, all that sort of stuff, hang out. But like I said, I'm probably not making friends doing these sorts of things. And of course, my brother's channel as well. Go and check his out, Twitter as well. This is what I was talking about earlier. The banking crisis seems to be downgraded by the media here, calling it a concern rather than a crisis. So this is exactly what will happen in 2023. That I can guarantee. Other things in the market, whether you're going to get a return or a loss, I can't guarantee that, but I can guarantee you this is human psychology, this is market psychology, and it is going to play out exactly the same as it has done throughout history. So stay tuned, like, subscribe, check out the free investor report. Link is in the top of the video description. You want more detail on education, link is down there for TIA Premium. Thanks once again, guys. I'll see you at the next video. Have a fantastic weekend. Until the next video, peace out.